as Disney lately has had some wins at the box office with Inside Out 2 and Deadpool and Wolverine. On the theme park side, which drives 70% of the revenue for the company at this point, things have not been looking that great with lower crowds this summer. And given that Comcast had their quarter three earnings report show that they had a drop of about 10% on their theme park side, this could spell that we're looking at something kind of similar to Disney World. So we're going to article here from Forbes we're going to check out and we're going to talk about it. So hi, I'm Jared with Capture the Magic. Like I said, we have an article here. It says, does Comcast theme park sales drop spell trouble for Disney's quarter three? So Disney is expected to publish its quarter three results in August. That is going to be coming up, I believe, at the time of this recording tomorrow. So this is why I'm making this now. We expect Disney's revenues to come in at $23.2 billion for the quarter, slightly ahead of consensus. Okay, I'm not going to go into all the numbers because it gets pretty boring here, but says we expect Disney's theme park business, which has been the company's strongest performer post the pandemic, is likely to see its growth slow down over quarter three. During quarter two, Parks and Experiences revenue grew by about 10% year over year to $8.4 billion, driven by the cruise line businesses and Disney World in the U.S. And on the international side, you had Hong Kong Disneyland outperformed, driven by pent-up demand post-COVID-19. Says, however, Disney's management has indicated that it was seeing signs of a moderation from post-peak COVID travel, indicating that these growth rates are not sustainable. In fact, Comcast, which owns rival Universal theme parks, noted that it saw revenue from theme parks decline nearly 11% to $1.9 billion. Although this can be attributed to, in part, to a lack of new attractions at Universal's theme parks, the broader slowdown in post-COVID travel is also a factor. So Universal basically came out and said, like new attractions are what drives theme park attendance. And I think that's very true. Universal, they have had some newer stuff, but nothing that's like a headline attraction. They've had the Minions Villain Con, which that's a family, like that's not a main headliner attraction. They did the re-theme and basically have the kids zone, so you do have the roller coaster, which is basically the same ride that was the Woody Woodpecker roller coaster, because all the money and time and effort has been put into Epic Universe. Now, what I kind of think is going on that I don't think Forbes here is going to talk about is I think the anticipation for Epic Universe and people are just waiting for that to open before they're going to go on some of these trips. I think this is also affecting Disney. And now I had presumed it would affect Universal pretty easily. I mean, it's not hard to see. If you were going to go to Universal, why would you not just wait until this brand new theme park is open? So a lot of people are just going to put off trips in the short term, waiting for it to open and then take their big trip. Well, the thing is, I think this is also affecting Disney. People are kind of just stuck in the Disney bubble. I don't think they quite understand how much anticipation there is for this. And given that there's really nothing driving people to Disney World right now, I mean, the only thing that's been open is Tiana's Bayou Adventure. And let's be honest, that's a re-theme, and that ride has had its issues with availability and other things like that. So I do think that this is more of a bigger deal than what Forbes is even giving credit for here, but I digress. It says Disney's entertainment businesses saw some headwinds over quarter two amid lower advertising and affiliate revenues. Overall sales for the segment declined 5% year over year to $9.8 billion. And they do talk about how the theater side could see a boost from the Inside Out 2 animated movie and obviously Deadpool Wolverine. That's going to be a big boost. I mean, it is basically on its way to $1 billion. It may outperform Inside Out 2 when it's all said and done as well. They say over the last quarter, overall sales of the direct-to-consumer streaming businesses rose by about 13% to $5.6 billion. Over the last quarter, the Disney Plus core subscribers rose by more than 6 million. The thing about that, though, is they're implementing Hulu inside of this and all these other things. So it's really hard to know at this point what is what. But Disney Plus as a whole, they may show that Disney Plus is profitable in a quarter. They may be this quarter. But overall, Disney Plus has lost somewhere around like $11 billion. So just keep that in mind when they talk about Disney Plus being profitable. They're just talking about a quarter. And it's not talking about overall. I mean, overall, it's still very much in the hole. It says Disney stock has suffered a sharp decline of 50% from levels of $180 in early January 2021 to around $90 now, versus an increase of about 50% over the S&P 500 this roughly 3-year period. Notably, Disney stock has underperformed the broader market in each of the last 3 years. Actually, it's the last 4 years. Returns for the stock were down 15% in 2021, down 44% in 2022, and 4% in 2023. So it's in comparison, returns for the S&P 500 have been up 27%, down 19% in 2022, and up 24% in 2023. So that is one thing. Disney's stock has been underperforming for uh, years, not doing well on that end. And a lot of it is because I think they went all in on Disney Plus and basically trying to turn Disney into a tech company. And when I think they realized, oh, people aren't just going to stay inside and stream movies and shows forever, they had an issue. Also, the fact that Disney Plus content really wasn't that good. So it says, so is Disney's stock undervalued in its current environment? Despite concerns in the streaming and media operations, we remain positive on Disney stock for a couple of reasons. Disney's looking to unlock more value by restructuring its business while cutting costs to bolster profitability. The company expects to meet or exceed its goal of cutting about 7.5 billion in expenses by the end of this fiscal. They're going to do that by firing people mostly. Just want to put that out there. With earnings per share projected to grow at least 20% versus last year. It says we value the Disney stock at $137 per share, which is about 50% ahead of the current stock price. Now, I'm not giving you any financial advice. I personally don't know if I would listen to them about financial advice of this because I don't really know why they would be thinking that Disney stock is actually valued in that range. Um, Now, they don't really answer their own question in this about did Comcast down third quarter? Is that going to spell over Disney? I think now, as a whole, they may get a bolster in terms of Deadpool Wolverine and Inside Out 2 on the theater side. But again, the movie side pales in comparison as to what the theme parks bring in. Again, it's about 70% of the revenue for the entire company. And I think it's pretty safe to say we're going to see a decrease in attendance when it comes to Disney World. Now, revenue, I mean, sometimes the revenue can be up higher because, again, Disney has been thinking for a long time they're going to have less people coming, but basically going to charge more per guest. I think you're probably going to see a drop in the revenue as well on the park side. And the stock now, I mean, Disney does have, if they do have a down quarter, the stock price is under $90 right now. Now, it was under $90 before there, obviously, this past Monday, there was a big downturn in the market. So it was down in the mid 80s. Disney has a pretty good excuse, at least from a shareholder's perspective, or at least a PR perspective, if their stock is down to say, hey, it's been a really bad week. All the stocks were down, this week, which is true, but it doesn't also excuse them for underperforming the market for basically 4 years. But they do have a built-in excuse for that. So we'll have to see how the shareholders react to that. If they do miss projections, with the market being as shaky as it is, if they do miss projections on the theme park side, if that, sometimes when a company misses projections on their revenue or things like that, the stocks go into a little bit of a sell-off. It's possible. Given right now the market is not strong, it could easily signal a sell-off. It could hold steady because it's already undervalued given everything took a hit this past week. So I'm not really sure on the stock price, nor is this stock advice. I do pay attention to stock prices, and sometimes it's funny how investors react to certain news in that way. But I'm not going to be surprised at all if they're going to show, a down quarter on the theme park side. Now, which brings in my bigger thing is I actually think Epic Universe is driving a lot of this. Now, nobody's going to talk about this, especially on the investor side, because they're not plugged into this. But I do think the anticipation for Epic Universe is higher than what most people realize. I mean, I think if you're plugged into this stuff, it's easy to see. But I do think there's a lot of people, and given the economic environment as well, which again, that Disney's going to point to that as well and say, hey, the economy's not the best. Look at the stock market, look at all this stuff like that. But because of that, I think a lot of people are saving their money and saying, I'm just going to wait for Epic Universe. And Disney could see a boost from Epic Universe. I'm not saying they won't, but I don't think they're going to see as big of a boost from Epic Universe as they might anticipate. Back in 2014, when the Wizarding World opened, Universal saw a 35% increase in their attendance, and Disney also saw a boost in theirs. But that was also still in the time period where Universal and it always has been sort of an add-on trip to a Disney trip. You can do Universal in 1 to 2 days. Universal is trying to change that with Epic Universe to make you spend a week at Universal Studios. So you very well could see this flipped where people spend longer time at Universal and then add on maybe a day at Magic Kingdom or Epcot or Hollywood Studios to a trip and not spend an entire week at Disney, which if that does happen, Disney they will feel that. That is something that will hit them in their market share and their bottom line. But I do think that Comcast kind of shows like the overall Orlando market is down and travel is down, a lot of things. So I do think we're going to see a lower quarter for Disney. It'll be interesting to see the messaging that they come out of this, given, again, they do have the sort of a built-in I'm not going to say excuse, but they do have a built-in messaging and say, hey, this whole entire market's down. So this is one reason why. So we'll have to see what that does. But we'll have to wait and see for the earnings report, how that ends up shaking out, and whatever they do talk about in that, we will talk about on here. But that is going to do it for this video. If you like this video, please like it and subscribe to the channel, as we do lots of coverage here of not only Disney World, we also do Universal Studios, Epic Universe, and pop culture news. And let us know in the comments what you think about all this. And until next time, we will see you in the parks.